Let me ask you something, and be honest with yourself. You're in your 40s, or maybe you're approaching them, and somewhere in the back of your mind, there's this quiet, uncomfortable question. Am I where I'm supposed to be financially? Maybe you've got a decent income, maybe you've got a house, a car, a family, but do you have a plan? Do you have real, concrete money milestones locked in, or are you just hoping things will work out? Because here's the truth nobody tells you. Your 40s are the most financially decisive decade of your life. The choices you make right now will either set you up for a life of freedom and security or lock you into stress and struggle well into your 60s and beyond. Today, we're going to fix that. I'm going to walk you through the major money milestones you absolutely need to hit in your 40s and exactly how to get there. Let's get into it. Welcome back to the channel. If you're new here, we talk about building real wealth, not get-rich-quick schemes, not flashy nonsense, just smart, proven financial strategy that actually works in real life. Make sure you hit that subscribe button because we drop videos like this every week. All right, let's talk about your 40s and money. The very first milestone, and this is non-negotiable, is that you need to be aggressively funding your retirement accounts. By your 40s, the window of compounding is still open, but it's starting to narrow. Every single year you delay costs you dramatically in the future. We're talking tens, sometimes hundreds of thousands of dollars in lost growth. Here's what you need to be doing. If you have a 401k through your employer, you should be contributing the maximum. As of recent IRS limits, that's over $23,000 per year. And if you're 50 or older, you get a catch-up contribution on top of that. If you haven't been maxing this out, your #1 job starting today is to fix that. Don't have a 401k? Max out a Roth IRA or traditional IRA. Open a SEP IRA if you're self-employed. The vehicle matters less than the habit of consistent maximum contribution. The golden rule? Pay your future self first. Before lifestyle upgrades, before vacations, before anything, retirement contributions come first. Milestone number 2, get rid of toxic debt completely. I'm talking about credit card debt, personal loans, anything with an interest rate above 7 or 8%. This is wealth poison. It doesn't matter how well your investments perform if you're simultaneously bleeding money in high interest payments. Think of it this way. Paying off a credit card with a 20% interest rate is the equivalent of getting a guaranteed 20% return on your money. You will never find that in the stock market consistently. Now, not all debt is equal. A reasonable mortgage with a low interest rate? That's manageable. A car loan at 4%? Manageable. But revolving credit card debt, that has to go. Here's the action step. List every single debt you have. Write down the balance and the interest rate. Attack the highest interest rate debt first with every extra dollar you can find. That's the avalanche method, and it saves you the most money mathematically. Give yourself a clear deadline, not someday, a real date. Make it your mission to be completely free of high-interest debt by the end of your 40s at the very latest, ideally much sooner. Milestone 3 is something a lot of people skip because it feels boring. But skipping it is one of the biggest financial mistakes you can make. You need a fully funded emergency fund, in cash, sitting in a high-yield savings account. How much? 6 to 12 months of living expenses. Not income, expenses. Rent or mortgage, food, utilities, insurance, minimum debt payments. Add it all up and multiply by 6. That's your minimum target. In your 40s, life gets more complex. Your income might be higher, but so are your responsibilities. A job loss, a medical emergency, a major home repair. Any of these can completely derail your financial life if you don't have a cushion. Your emergency fund is not an investment, it's insurance. It's the thing that keeps you from raiding your retirement accounts or going back into debt when life throws a curveball. And trust me, it will. Get this done, park the money somewhere earning a decent yield, there are plenty of high-yield savings accounts paying competitive rates, and leave it alone. Milestone 4. You need to know your number and be on track to hit it. What's your net worth right now? Do you actually know? Assets minus liabilities. That's it. Add up everything you own: home equity, retirement accounts, investments, savings, any business assets. Then subtract everything you owe. That's your net worth. Now, a common benchmark is to have saved roughly 3 to 4 times your annual salary by age 40 and closer to 6 times by age 50. These aren't perfect targets for everyone, but they give you a useful baseline. More importantly, you need your number. How much do you need to retire comfortably? A general rule of thumb is to multiply your annual retirement spending by 25. That's your retirement nest egg target, based on the 4% withdrawal rule. Once you have that number, reverse engineer it. How much do you need to save per month to get there? What rate of return do you need? Are you on track or behind? If you're behind, and many people are, and that's okay, you now know exactly how much you need to accelerate. Clarity is power. Know your number. Here's a milestone that separates people who get by in retirement from people who thrive. Multiple income streams. If 100% of your income comes from one employer right now, that is a massive risk. One layoff, one restructuring, one health issue, and your entire financial life is in jeopardy. In your 40s, you have the experience, skills, and network to start building additional streams. This doesn't mean you need to quit your job and start a business. It could be rental income from a property, dividend income from a stock portfolio, freelance or consulting work on the side, a digital product, an online course or content creation, a small business you run part-time. The goal in your 40s is to plant these seeds so that by your 50s and 60s, these streams are growing and contributing meaningfully to your financial picture. Wealthy people don't have one income stream. They have multiple. Start building yours now. This one gets skipped constantly, and it can be financially catastrophic. Milestone 6. Make sure your insurance is solid and comprehensive. In your 40s, you likely have people depending on you, a spouse, kids, maybe aging parents. That means you need the right life insurance. If you have dependents, you should have enough term life coverage to replace your income for 10 to 12 years minimum. Don't leave your family exposed. Disability insurance is equally critical and massively underrated. Your ability to earn income is your greatest financial asset right now. If you became disabled tomorrow, could your family survive? Make sure you're covered. Also, review your health insurance, your home insurance, your auto insurance. Make sure your coverage limits actually reflect your current life situation, not what you set up years ago. Insurance isn't exciting, but a single uncovered disaster can wipe out years of financial progress in an instant. Get this right. If you don't have a will, this needs to happen now, not next year. Now. Estate planning isn't just for the ultra-wealthy. It's for anyone who has assets, a family, or specific wishes about what happens when they're gone. And in your 40s, you absolutely fit that description. At a minimum, you need a will that specifies how your assets are distributed, a durable power of attorney, someone you trust to make financial decisions if you're incapacitated, a healthcare directive or living will, your wishes for medical care, and beneficiary designations reviewed and up to date on all accounts, retirement accounts, life insurance, bank accounts. This is one of the most loving things you can do for the people you care about. Nobody wants to leave their family fighting legal battles or navigating chaos during an already painful time. Sit down with an estate planning attorney. It's not as expensive or complicated as most people think, and it brings incredible peace of mind. If you've maxed out your retirement accounts and still have money to invest, congratulations, you're in a great position. But you're not done. Milestone 8. Build a taxable investment portfolio. Taxable brokerage accounts give you flexibility that retirement accounts don't. You can access the money before retirement age without penalties. You can invest in anything. You can use it for a second home, early retirement, business investment, or just pure wealth building. In your 40s, a simple low-cost index fund strategy is your best friend. Total market index funds, S&P 500 funds, some international exposure. Keep it simple, keep costs low, and stay consistent. Reinvest dividends, Keep adding every month, let compounding do the work. Don't panic when markets drop. They always recover, and downturns are buying opportunities for long-term investors. Wealth is built slowly, then all at once. Be patient, be consistent, stay invested. All right, let's bring it all home. Your 40s are not a time to coast. They're not a time to figure it out later. They are the decade where your financial future gets decided. The good news, you still have time. You have income, experience, and enough runway to make massive progress, but only if you act with intention. So here's your action step for today. Pick one milestone from this list that you know you're behind on. Just one. And this week, not someday, this week, take one concrete step toward it. Open that account, make that appointment, run those numbers. Small actions done consistently create life-changing results. If this video helped you, hit the like button. It genuinely helps this channel grow. Drop a comment below. Which of these milestones are you working on right now? I'd love to know. And if you want to go deeper on any of these topics, retirement strategy, debt payoff, investing, we've got full videos on all of it right here on the channel. Check those out next. Until then, take care of your money because your money takes care of your life. See you in the next one.